I gave AI control of my portfolio for 30 days and the results shocked me beyond anything I expected. $47,000, 21 different stocks, 3 AI models making every single decision while I watched my money move without touching a button. 3:47 a.m. My phone buzzes with a trade alert and I'm watching AI sell my Tesla position for reasons I don't fully understand and can't control. By day 7, the AI had executed 42 trades and I was down $1,847 with absolutely no human intervention to stop it. But here's what this 30-day experiment actually revealed about AI portfolio management and why the results aren't what you think they are at all. I tested ChatGPT, Claude, and Perplexity with real money to see which AI actually makes better investment decisions and whether any of them can beat human judgment. This channel breaks down complex financial strategies with brutal honesty using real experiments and actual data so you can make smarter decisions with your own money and avoid expensive mistakes. If you want more real-world finance experiments like this, make sure to hit that subscribe button right now because this is just the beginning of testing AI tools. Hit that subscribe button right now because in the next 20 minutes, I'm revealing everything the AI did with my money, including the biggest mistakes you need to avoid. And turn on the notification bell so you never miss when I release the next finance experiment that could potentially save or make you thousands of dollars in the future. The question that started this whole experiment was simple but terrifying. Can artificial intelligence actually beat human portfolio managers? Or is it just sophisticated pattern matching that will lose your money when markets shift? January 3rd, 2026, I deposited $47,000 into a brokerage account and gave 3 different AI models complete authority to research stocks, execute trades, and manage every single position without my emotional interference. ChatGPT handled quantitative analysis and stock screening. Claude analyzed SEC filings and earnings reports with its massive context window, and Perplexity provided real-time market news and sentiment analysis from hundreds of sources simultaneously. But here's what nobody tells you about AI portfolio management, and this is the part that almost made me pull the plug on this entire experiment by day 4 when things started going wrong. The AI hallucinated fake earnings reports, cited stock analysis that didn't exist, and recommended buying companies based on completely fabricated financial data that would have cost me thousands if I hadn't caught the error in time. The models suffered from massive over-extrapolation bias, taking a stock that went up 15% in 1 week and predicting it would continue rising forever without any consideration for mean reversion or fundamental valuations. At 3 a.m. on day 9, the trading bot crashed completely, entered positions at the wrong prices, failed to account for market holidays in Turkey's BIST exchange, and somehow bought the same stock twice due to a time zone error. The AI sold Tesla at a loss for tax purposes, then automatically bought it back 23 days later, triggering a wash sale that cost me $4,200 in disallowed tax deductions because the model had zero understanding of IRS regulations. But the worst part wasn't the technical failures or the tax penalties. It was the psychological torture of watching an algorithm make decisions with your real money at 3 in the morning while you're completely powerless to intervene without breaking the experiment. So after 30 days of AI-controlled portfolio management, technical disasters, psychological warfare, and near-complete chaos, here's what actually happened to my $47,000 and whether any of this is worth trying yourself. Let me walk you through exactly how I set up this AI portfolio management system, because the technical implementation is where most people fail before they even start and lose money unnecessarily. ChatGPT handled all quantitative analysis using its GPT-4o model because it can process complex spreadsheets and calculate sharp ratios, standard deviations, and correlation matrices faster than any human analyst could possibly manage. Claude analyzed lengthy SEC filings, 10K reports, and earnings call transcripts with its 200,000 token context window, which means it could read an entire annual report in seconds and extract key financial risks that human analysts might miss. Perplexity provided real-time market intelligence by scanning over 300 news sources simultaneously, analyzing sentiment from financial Twitter, and catching breaking news that could move stock prices before traditional research services even published their reports on the events. The biggest technical challenge was feeding real-time market data into AI models that have knowledge cutoffs. So I built a Python script with Yahoo Finance API integration that automatically pulled live stock prices, volume data, and technical indicators every 15 minutes throughout trading hours. Day 1, the AI allocated the 47,000 across 21 different positions with 40% in technology, including NVIDIA, Palantir, and TSMC, 25% in healthcare, 20% in financial services, and 15% in consumer discretionary stocks based on momentum and fundamental analysis. The first week was absolute chaos with the AI executing 42 different trades, constantly rebalancing positions, selling winners too early, holding losers too long, and generating a negative return of $1,847 while I watched helplessly at 3 in the morning. On day 4, ChatGPT hallucinated a completely fake quarterly earnings report for a mid-cap pharmaceutical company, citing revenue growth of 43% that never actually happened, and recommended buying $5,000 worth before I manually verified the actual SEC filing and discovered the fabrication. Here's what the AI didn't account for in its optimization algorithm. Every single trade on Turkey's BIST exchange costs between 1 and 3.75 per 10,000 in commissions plus 5% BSMV tax, which means 42 trades generated $55 in pure friction costs that directly reduce returns. For U.S. markets, the fee structure gets significantly more complex with SEC Section 31 fees, FINRA trading activity fees, consolidated audit trail charges, and short-term capital gains tax as ordinary income at rates up to 37%, which the AI models completely ignored when calculating expected returns. The catastrophic wash sale on day 17 cost me $4,200 in disallowed tax deductions because ChatGPT sold Tesla at a loss, then repurchased it 23 days later, 7 days too soon under IRS regulations. The over-extrapolation bias was insane, with the AI seeing NVIDIA rise 15% in 1 week and immediately projecting that growth rate would continue indefinitely, predicting 400% returns with 99% confidence, completely ignoring mean reversion or market cycles. Day 9 at 3 a.m., the entire system crashed with the bot entering wrong prices, failing to account for a Turkish market holidays, executing duplicate orders due to time zone confusion, and somehow buying the same position twice within 30 seconds. I caught the AI attempting to activate 20 times leverage on a volatile tech position, which would have exposed me to $940,000 in potential losses on a $47,000 account, a complete disaster that I stopped literally seconds before execution. Day 15 was the pivot point where I implemented strict guardrails, including 5% maximum position size, mandatory human approval for all trades over $1,000, and explicit wash sale prevention rules programmed directly into the algorithm. After 30 days, the final numbers showed a 10.3% return, turning $47,000 into $51,847. But that return came with a sharp ratio of 0.87 and maximum drawdown of 3.9% during the chaotic first week. The AI portfolio beat the S&P 500 by 8.2 percentage points during the same 30-day period, but it required 3 times higher volatility, constant monitoring at 3 a.m., and psychological stress that no passive index fund could ever generate. The AI's best trade was Palantir, buying at $23.47 after detecting increased government contract activity through news sentiment analysis, holding for 11 days, then selling at $26.91 for a 14.7% gain worth $2,187. The worst trade was a biotech stock bought at $87.23 based on a completely hallucinated FDA approval that never existed, which I panic sold at $71.15 for an 18.4% loss of $1,653 when I discovered the fabrication. When you account for all hidden costs, including $55 in commissions, 4,200 in wash sale penalties, 127 in bid-ask spreads, 89 in slippage, and 45 in API fees, the real net return drops from 10.3% to only 5.7%. The psychological cost was brutal, with 347.6 hours invested over 30 days, averaging 11.6 hours daily of monitoring, debugging, and manual verification, which means my effective hourly rate was $13.94, barely above minimum wage. The mental toll was even worse, with average sleep dropping to 4.2 hours per night, constant anxiety about 3 a.m. trade alerts, elevated resting heart rate of 127 BPM, and the overwhelming feeling of losing control of my own money. To be fair, AI genuinely excels at processing speed by analyzing entire 10K filings in 8 seconds, handling massive data volume by tracking 300 news sources simultaneously, and pattern recognition by scanning 50 years of historical data to find correlations humans would never spot. But AI catastrophically fails at regime changes like COVID crashes, where historical patterns become useless. Understanding market context like the DeepSeek panic, where narrative matters more than data, and regulatory compliance, including that $4,200 wash sale penalty from complete ignorance of tax law. If you attempt AI portfolio management without strict guardrails, you will lose money, period. So you need 5% maximum position sizing. Zero leverage ever, mandatory human approval for trades over $1,000, automatic stop losses at negative 15%, wash sale prevention built into code, and daily drawdown limits of negative 2%. Turkey offers massive tax advantages with 0% capital gains, tax on BIST stocks, and stock-heavy funds held over 2 years, while U.S. traders face up to 37% short-term capital gains rates, plus wash sale nightmares, saving me approximately $1,847 in this experiment alone. The brutal truth is a simple S&P 500 index fund returned 2.1% during the same period, with literally 0 hours of work, 0 stress, and 0 3 a.m. panic attacks, making the AI's extra 3.6% return questionable at best when considering time and mental health costs. AI portfolio management is only for people with strong technical backgrounds, Python coding skills, extremely high risk tolerance, ability to monitor markets 10 plus hours daily, at least 25,000 in capital, excellent stress management, and deep tax law knowledge, which describes maybe 2 to 5% of investors maximum. Beginners, full-time workers, anyone with low risk tolerance, people who can't handle 3 a.m. alerts, investors without coding experience, and anyone who values their mental health should absolutely avoid AI portfolio management and stick with boring index funds instead. The smarter approach is using AI as a research assistant, not an autonomous trader, where ChatGPT analyzes data and suggests ideas. You maintain complete decision authority, and you execute trades manually, reducing time investment from 347 hours to maybe 2 or 3 hours per week, while keeping full control and drastically lowering stress levels. Final numbers: 47,000 grew to 51,847 for a gross 10.3% return. But after all costs, including that brutal $4,200 wash sale penalty, net return was 5.7% or $2,679 divided by 347 hours equals $7.72 per hour, well below minimum wage. My verdict after 30 days of AI portfolio management is clear. For 95% of investors, this is absolutely not worth the time, stress, costs, and complexity, and you should stick with index funds or use AI purely as a research tool while maintaining complete human decision authority over every single trade. 3 critical lessons. First, AI will hallucinate fake financial data with complete confidence, so verify absolutely everything through official sources. Second, hidden costs, including taxes and fees, will destroy your returns if not carefully tracked. And third, your Mental health and sleep are worth infinitely more than any extra alpha. If you absolutely must try AI portfolio management, open a basic brokerage account. Start with 80% in boring index funds. Use AI for only 20% experimental money. Paper trade for 6 months before risking real capital. Never risk more than 5% per position. Implement every guardrail mentioned earlier and track every single cost down to the penny. The future probably involves multi-agent systems where specialized AI agents handle news analysis, technical indicators, fundamental research, and risk control separately, but with a human supervisor maintaining final decision authority at the center, though this technology is realistically still 2 to 3 years away from being reliable for retail investors. My next experiment starting February 1st is using AI purely as a research assistant with 90% in boring S&P 500 index funds, 10% in AI suggested. Individual picks that I manually approve and execute, monthly rebalancing only, and zero autonomous trading while maintaining complete human control over every decision. If you found this 30-day AI portfolio experiment valuable, hit that subscribe button right now because I'm continuing to test every major AI finance tool with real money and sharing the actual unfiltered results, including all the failures, costs, and lessons learned, so you don't have to waste your own capital making the same expensive mistakes. Remember, wealth building isn't about finding the most advanced technology or the shiniest new tool. It's about consistency, patience, low costs, and protecting your mental health, which means boring index funds will outperform 95% of AI algorithms once you factor in all the hidden costs, time investment, and psychological damage. Boring wins, always has, always will. Thanks for watching this complete breakdown of my 30-day AI portfolio management experiment. I genuinely hope sharing my mistakes, cost, and psychological struggles saves you from making the same errors with your hard-earned capital, and I'll see you in the next finance experiment where we test something equally ambitious and probably equally chaotic. Don't forget to smash that like button if this video helped you avoid a costly mistake. Subscribe and hit the notification bell so you never miss the next experiment. And share this with anyone considering using AI for portfolio management so they see the full uncensored reality before risking their money. Thank you, and I'll see you in the next one.